So till now we have discussed in holding companies account up to problem number 5. So now let us see problem number 6. So balance sheet of H and S Limited is given. Balance sheet of holding company and subsidiary company is mentioned as on 31st March 2015. So let us see the balance sheet. If you see the asset side, there is freehold premise and machinery. So these are fixed asset. Then stock, debtor and cash, it is current asset. And then there is an investment. Investment, they said, in shares of Yes Limited. In shares of Yes Limited, 1,80,000. So this is nothing but investment made by the holding company in subsidiary company. So investment amount we know 1,80,000. So we want paid up value that we have to calculate later. Then if you see liability side, there is share capital, shares of 10 each. Shares of 10 each. Holding company share capital is 3 lakh and subsidiary company share capital is 1,50,000. General reserve of the both the company is given, but we want only general reserve of subsidiary company for working note calculation. Similarly, profit and loss account of the both the company is given, but we want subsidiary company profit and loss account. That also we have to see. Then creditor, both the company creditor is given. So balance sheet total is 6,80,000 and 3,12,300. After seeing the balance sheet, there are certain adjustment. H Limited acquired 12,000 shares of Yes Limited as on 1/4/2014. So here acquisition date is at the beginning of the year. So no problem, no need of calculating current year profit. If the acquisition date is somewhere in the middle of the year, like we have discussed in the previous problems, in that case what we have to do? We have to calculate current year profit or loss. But in this case, see this acquisition date, financial year. Financial year starts from 1st April and ends on 31st March. So we'll easily we can make out that it is at the beginning of the year. On scrutiny of the balance sheet, H Limited, the following details were obtained. So there are certain adjustment is given. First one, profit and loss account includes interim dividend at the rate of 10% per annum from Yes Limited. So here what they are saying, profit and loss account means here profit and loss account of H holding company includes interim dividend at the rate of 10% per annum, not per month, per annum from Yes Limited. So what do you mean by interim dividend? Interim dividend is a dividend which is paid somewhere in the middle of the year. Usually it is paid at the middle of the year. So how to calculate dividend now? So for dividend calculation, first we want holding company's share capital in a subsidiary company. First thing, holding company share capital in subsidiary company we want. Then that itself is our paid up value. On the paid up value, we can easily calculate what is a interim dividend. Whenever such a dividend is declared, what happens? It becomes capital in nature because we are dealing about this one capital profit because acquisition before acquisition. We'll assume that these all things happen before acquisition and it is long term in nature. That is why it is a capital profit. Whenever there is a capital profit, you have to take that as capital reserve. So interim dividend answer you have to consider for capital reserve calculation. One more thing, after finding interim dividend, you have to divide holding company P&L account into two parts. One is capital profit and one more is revenue profit. And that capital profit in consolidated balance sheet you have to deduct from holding company account. That is holding company P&L account, you have to deduct that capital profit. That means in short you can say only revenue profit is recorded in consolidated balance sheet. Capital profit you should not consider. Then stock includes 6,000 of stock at cost purchased from Yes Limited. So this is nothing but holding company involves some stock, that is 6,000 worth of stock, that is at year end. purchased from Yes Limited. So on this amount we have to calculate unrealized profit. But here stock at cost is given. So we have to see whether there is any percentage is given in the problem. That we have to see now. But in this problem there is no percentage is mentioned. See this, no percentage is given. So, but there is one more information is given in the adjustment. Creditor include 18,000 for the purchases from Yes Limited. So, holding company creditor includes 18,000 means there is a supply of goods from subsidiary company. So, it is intercompany transaction. Whenever there is an intercompany transaction, supply of goods, there is two parts. One is in the asset side, there is a debtor, and in the liability side, there is a creditor. So from both the side, you have to deduct intercompany amount. So in this problem, what is the intercompany amount we have to see? Intercompany amount is nothing but 18,000. This 18,000 you have to deduct from both the side. That is from debtor as well as from creditor. And on this 18,000, later company made a profit of 4,500. So who is a later company here? Later company is nothing but, see this, creditor include 18,000 for the purchases from Yes, on which later company made a profit of 4,500 means here holding company. See this, for 18,000, 4,500 is a profit. For 18,000, 4,500 is a profit. And for unsold stock is nothing but unrealized profit. When unrealized profit will come only when there is a unsold stock is there at the year end. So what is our unsold stock amount? 6,000. So for 18,000, 4,500 is a profit. For 6,000, how much? Cross multiplication we have to do, because here no percentage is given. So if once we do the cross multiplication, we can easily get unrealized profit. After getting the unrealized profit, there is a two-way deduction. Two-way deduction. One is from stock, that is asset side stock from holding company plus the subsidiary company stock. You have to deduct unrealized profit amount. And in the liability side, in the consolidated balance sheet, there is P&L. P&L of subsidiary plus P&L of holding. From these two information, you have to deduct unrealized profit amount. So both the side there is a deduction. Yes. And after this, it is further stated that on 1/4/2014, the profit and loss account of Yes Limited stood 76,000 and general reserve at 4,500. So this information is nothing but pre-acquisition reserve and post-acquisition pre-acquisition reserve and pre-acquisition P&L is given in the problem. Why we can say that it is a pre? Because at the beginning of the year, that is on 1/4/2014, these balance were there, 76,000 and 4,500. That is why what happens? There is pre-acquisition reserve, that is 4,500. Then there is pre-acquisition profit, that is 76,000. Then no final dividend yet to be proposed to be declared by Yes Limited. That means what? Dividend is not declared. That is why we have to calculate interim dividend calculation. Interim dividend amount we have to calculate. Prepare consolidated balance sheet. After knowing all these information, we have to do consolidated balance sheet. So first calculation here, we have to see this answer part. Holding company capital in subsidiary company. How to get holding company capital in subsidiary company? First we want how many shares holding company acquired in subsidiary company. For that, let us see the question once again. How many shares it has acquired? 12,000 shares. See this. Adjustment they have given 12,000 shares. So out of subsidiary company shares, that is how to get number of subsidiary company shares, that is 1,50,000 divided by paid up value. 1,50,000 divided by 10 if you do, you will get 15,000. Out of 15,000 shares of subsidiary company, 12,000 acquired by holding company. So here you can say that this 12,000 is a majority. So what is a minority? remaining 3000 is a minority. So that is why here 12,000 into 12,000 into 10. Why 10? Because it is a paid up value we have to consider, or face value. Shares of 10 each they have given. That is why 12,000 into 10. So you will get the amount as 1,20,000. So this is nothing but a paid up value of the share. 1,20,000. On that we can easily calculate interim dividend. How to calculate interim dividend? There is a rate given in the adjustment, that is 10% per annum from Yes Limited. So on 1,20,000 take 10%, you will get interim dividend as 12,000. But this interim dividend, this is out of capital transaction. Capital transaction, because we have considered paid up capital. That is why what happens? It becomes capital profit. It is a capital profit. Profit to whom? It is a profit to holding company. Holding company is getting the profit. Then on that capital profit, as per accounting standard 21, what happens? Capital profit is equal to capital reserve. So we have to take this interim dividend answer as capital reserve. So this is calculation number 1. Then there is one note is mentioned. See this. The profit and loss account of H Limited includes interim dividend received from S Limited. That we know, that is given in the adjustment at 10% per annum. Hence, profit and loss account of H Limited should be shown as under. Now we have to divide holding company profit and loss account. So let us see the profit and loss account of holding company, that is 1,60,000. See this, 1,60,000 belongs to holding company profit and loss account, that is nothing but H Limited profit and loss account. So 1,60,000, from 1,60,000 there is 12,000 interim dividend, that is a capital profit. So show it separately. So in this 1,60,000, 12,000 is a capital profit, means remaining is a revenue profit. Very clear. So that is 1,60,000 minus capital profit, or minus 12,000. If you do, you will get a remaining answer 1,48,000 as a revenue profit. This profit you have to show in consolidated balance sheet under P&L account and in H Limited column. H Limited, under H Limited you have to write 1,48,000 and not 1,60,000, because capital profit we should not consider, only revenue profit we have to consider. Yes, after this, as usual, we have to do all the working notes. So first working note of this problem is calculation of pre-acquisition and post-acquisition reserve. If you see, pre-acquisition reserve is given in the adjustment. So let us see the pre-acquisition reserve. What is the pre-acquisition reserve given in the adjustment? 4,500. See this. 4,500 is pre-acquisition reserve, means we want total reserve of subsidiary company. Whereas total reserve of subsidiary is given in the balance sheet. See this. General reserve subsidiary company 6,000. Out of 6,000, 4,500 pre means remaining is post. So what is post acquisition reserve? 1,500. That is total reserve minus pre-acquisition reserve 4,500. If you do, you will get 1,500 as post acquisition reserve. This is working note number 1. After this, you have to do similar type of calculation for profit also. That is working note number 2, calculation of pre-acquisition and post-acquisition profit. Again, pre-acquisition profit is given in the adjustment. See this, given in the adjustment 76,000 profit and loss of S Limited as on 1/4/2014. But we want total profit and loss of yes or subsidiary company, that is 1,08,000 given in balance sheet. So out of 1,08,000, 76,000 is pre, means remaining is a post acquisition profit. See this, 1,08,000 minus pre acquisition profit, you will get post acquisition profit answer as 32,000. This is our working note number 2. Yes. After this, we have to calculate majority minority ratio. That is working note number 3. For this, we want, one is share capital of subsidiary we want. Then second thing is paid up value of the share we want. That is face value of the share we want. Then we have to find out the number of shares available in subsidiary. Then we have to see how many shares acquired by the majority. Then we have to find out what is minority. Then after knowing the majority and minority, we have to simplify in order to get the ratio. Once we got the ratio, what we have to do? We have to get that in fraction, because our calculation of majority and minority involves fraction share is needed. See this, now calculation of majority minority ratio. Share capital of subsidiary is given in the balance sheet. If you see S limited column, there is capital is given 1,50,000. Paid up value is 10, we know. Number of shares, we have to divide 10, that is 1,50,000 divided by 10. If you do, you will get number of shares as 15,000. H limited acquired 12,000. This information is given in the adjustment. So out of 15,000, 12,000 is acquired by holding company, means remaining 3,000 is acquired by minority. Who is a minority here? Minority is nothing but outsider or third party. And who is a majority? Majority is nothing but it is holding company. Interest means what? Interest means claim. What do you mean by interest? Interest is equal to claim. So claims of the outsider is known as minority interest. Claims of the holding company is known as majority interest. So now this is very clear. So what type of claim? What type of claim? Claims in the net assets and net assets of the subsidiary company. Very important. Claims in the net assets of the subsidiary company means, suppose subsidiary company has building worth 10 lakh. Out of that 3 lakh may belong to minority. Remaining 7 lakh belong to majority. Like that, in all the asset there is a division. Some portion belongs to minority, some portion belongs to holding company or majority in subsidiary company. So here now we got 12,000 is to 3,000. We have to simplify this one. After simplification, all 30 gets cancelled. 3 ones and 3 fours are 12. So 4 is to 1 will be our ratio. So here there are total 5 unit. 4 plus 1, 5 unit. So majority fraction is 4 by 5. Very clear by this information. Majority fraction is 4 by 5. Minority fraction is 1 by 5. After knowing the fraction, what we have to do? We can easily calculate minority interest and majority interest. So our working note number 4 is calculation of minority interest. So for minority interest, there are 3 things needed. Basic things. One is share capital of subsidiary is needed. Total reserve of subsidiary is needed. Total profit and loss account of subsidiary is needed. So share capital of subsidiary. See here we have to write only 1 by 5 share capital. So it is understood share capital means share capital of subsidiary. So what is the share capital of subsidiary? That we have to see the balance sheet. Share capital of subsidiary is 1,50,000. See this. So on 1,50,000, 1 by 5 shares belong to minority. So take 1 by 5. 1,50,000 into 1 by 5 is equal to 30,000. So now this is 30,000 for first answer. Now second one. 1 by 5 share in total reserve. Total reserve, again total reserve of subsidiary. If you see the balance sheets, S limited column, you will come to know 6,000 is the total reserve. Take 1 by 5. That is 1,200. Similarly, we want total profit of the subsidiary. Total profit of the subsidiary is given in the balance sheet, S limited column, 1,08,000. 1,08,000 into 1 by 5. That is 21,600. So total minority interest, you have to add all these things. Fraction share in share capital, share in total reserve, share in total profit. Total minority interest is 52,800. So this 52,800 we have to show in the liability side of the consolidated balance sheet separately. Why we have to show this one? Because here this interest belongs to outsider. That is why we have to show separately, because we are preparing holding company account, and in holding company account, holding company is concerned about their settlement only. That is nothing but majority interest only. That is why all post acquisition profit and post acquisition reserve we have to show in the consolidated balance sheet. That is the reason. So wherever you write revenue, that appears in consolidated balance sheet. So now we have calculated minority interest. Now we can easily calculate majority interest. For majority interest calculation, what happens? We want separately, we want pre-acquisition separately needed, pre-acquisition reserve is needed, pre-acquisition profit is needed, post-acquisition reserve is needed, post-acquisition profit is needed, and one more thing, share capital is also needed. So minimum of 5 points will be there in majority interest and maximum of 6 to 7 point will be there. Why? Because if there is a preliminary expenses, you have to divide between majority and minority, but in this problem it is not given. Similarly, if there is any revaluation profit, that also you have to divide between majority and minority. In this problem, that is not given. So only 5 points you have to see. So under majority interest calculation, first one is 4 by 5 share. Why 4 by 5? We have already discussed. 4 is to 1. That is why 4 by 5 share in share capital. Again, share capital of subsidiary. Subsidiary share capital we know 1,50,000. So 1,50,000 into 4 by 5 if you do, you will get 1,20,000. So this 1,20,000 is nothing but paid up value of the share. That is why this information we have to set off against investment. So investment amount given in the balance sheet, let us see once again. So if we see the investment amount, that is 1,80,000. Paid up value we know 1,20,000. Can you tell me whether there is a goodwill or a capital reserve? Can you tell me, by seeing these two information, can you tell me whether there is a goodwill or capital reserve? Paid up value 1,20,000 and investment 1,80,000. Yes. Answer please. Comment in the chat box. What is, whether should be there is a capital reserve or goodwill? Can you tell me? Yes. Can you answer this one? Akamsha, Amrita, Ankita, Anusha, Ashish, Disha, Kushal, Narasimha, Nishant, Omkar, Pooja, Pratish, Shifali, Suresh. Just tell me. Shifali is saying no, means can you explain? See, here holding companies, yeah, no doubt. Yes. So now see this, holding companies paying more or less, can you tell me? In this two situation, paid up value is 1,20,000, investment is 1,80,000. Whether holding company is paying more to the subsidiary company, can you tell me more or less? Just comment in the chat box. Yes, this is very simple. You have to answer this one. Whether holding company is paying more. Tell me now. Yes or no? No answers. 15 members are there. Anyone can answer, right? Investment is more, paid up value is less. Of course, holding company is paying more. Whenever holding company is paying more, what happens? It is a loss to the holding company. Whenever there is a loss, it is treated as capital loss. So, capital loss as per accounting standard 21, we have to consider that information as goodwill. So, in this problem, we are getting goodwill when we see the investment and paid up value information, there is a goodwill. Now this is very clear. See this. So now we were discussing about majority interest calculation. Majority interest, now first point we have already discussed. Second one, let us see. Now we want 4 by 5 share in the pre-acquisition reserve. So pre-acquisition reserve information where you will get in the previous working note. Previous working note means working note number 1, if you see there is a reserve information pre-acquisition reserve 4500, or else you can see the adjustment also. So 4500 into 4 by 5. So what is the answer? 3600. So this is nothing but capital reserve. Why it is capital reserve? Because it is before the acquisition. Before the acquisition of the shares by the holding company. That is why it is capital reserve. Wherever there is a pre-information, we have to consider this as capital reserve. Now, next thing comes is 4 by 5 share in post-acquisition reserve. Post-acquisition reserve, again working note number 1, if you see 6000 is a total reserve, pre-acquisition 4500, if you minus, you will get 1500 as post-acquisition reserve. So post-acquisition reserve into 4 by 5, answer is 1200. This is revenue reserve. Why revenue reserve? Because this is after acquisition. Whenever it is after acquisition, we know the specified duration. So what is the duration? That is from 1st April until the preparation of the balance sheet, usually 1 year. So that is why it is short term in nature. That is why it is treated as a revenue reserve. But in the case of pre-acquisition, we don't know about the duration. That is why it is long term in nature. That is why it is treated as capital reserve. Pre-acquisition means capital reserve, post-acquisition means revenue reserve. Now similarly we have to do for pre-acquisition profit, that is 4 by 5 share in pre-acquisition profit. You can get this information by seeing working note number 2. Let us see the working note number 2. There is pre-acquisition profit 76,000. On that take 4 by 5. 4 by 5 if you take, you will get 60,800. So this 60,800 again pre-acquisition profit, that is why capital reserve. So this you have to write in front of the answer. You have to write these statements: capital, whether it is capital reserve, whether it is revenue reserve, whether it is should be set off against investment. These information you have to write. Yes, after pre-acquisition profit, next thing is post-acquisition profit. So 4 by 5 share in post-acquisition profit, that is again working note number 2. If you see 32,000 into 4 by 5, if you do, you will get 25,600. This is post-acquisition, that is why it is treated as a revenue profit. So now you know working note number 5, that is majority interest, is very important from the point of view of balance sheet. Why? Because there are several information from majority interest goes to the consolidated balance sheet, and there are several information that we have to consider for capital reserve calculation also. That is while preparing capital reserve. That is why now we have to see this working note once again. So there is capital reserve information. There are two information. There are two capital reserve information. One is pre-acquisition reserve information is there, and one is pre-acquisition profit information is there. So now total capital reserve we can easily find out. That is, one is pre-acquisition reserve plus pre-acquisition profit. You will get total capital reserve. And what about revenue reserve? Revenue reserve, you have to show this information under consolidated balance sheet. That is under reserve column. Under subsidiary limited column, you have to show 1,200. And similarly, this revenue profit under profit column, subsidiary limited column, you have to show 25,600. That means subsidiary limited column means under subsidiary you have to write this information. So this is about working note number 5. So now next working note is calculation of cost of control. So now we have already discussed what is the investment made. This investment made is given in the balance sheet, that is the asset side. If you see, they have given the information. Holding company's investment is 1,80,000. Paid up value of the share, less you have to deduct the paid up value of the share from the cost of investment in order to get cost of control or goodwill. So paid up value is nothing but majority interest first point answer. Majority interest first point answer, that is 1,20,000. So 1,20,000 is a paid up value. Goodwill is nothing but 60,000. 1,80,000 minus 1,20,000. 60,000 is our goodwill. After getting the goodwill, you know, as per accounting standard 21, that is consolidation of financial statement, you cannot show both. You have to show either capital reserve or goodwill in the consolidated balance sheet. That is why we have to set off. So set off of capital reserve against goodwill. So first one, total capital reserve we want. Total capital reserve we want. So how we can get this total capital reserve information? Just you have to see the majority interest working note. So let us see the majority interest working note once again. There we have written capital reserve. So take this 3600 and again one more capital reserve 60,800. That is nothing but pre-information. Yes. So add both. Add both 3600 plus 60,800 and one more 12,000 is there. So what is this 12,000? Can you tell me? What is this 12,000? Additional information 12,000. From where this information came? From where this amount came? Can you tell me now? 12,000. Yes. Can you answer? From where this 12,000 came? Yes, tell me. What we have calculated first? First thing what we have calculated. Yes, tell me. From where this 12,000 came? Can anyone answer? Akamsha, Amrita, Anusha, Ashish, Disha, Kushal, Narasimha, Nishant, Omkar, Pooja, Pratish, Shifali. Can you answer? This is nothing but interim dividend. Interim dividend answer. Interim dividend answer we have got in the first whatever we have calculated. See this. First thing we have calculated about interim dividend 1000 that is 12,000. See this 1,20,000 into 10%. 1,20,000 into 10%, 12,000, and that is capital profit. That is why it is treated as capital reserve. So interim dividend also you have to consider 12,000. So now you can easily get total capital reserve as 76,400. Less total goodwill. Total goodwill we know that is working note number 6 answer. Cost of control 60,000. So now you can see here negative balance is more. Negative balance is more means capital reserve, liability side information is more, and goodwill information is less. That is positive balance is less. So your final answer will be negative. Negative means you have to show this information in the liability side under capital reserve. So net capital reserve is 16,400. So liability side you have to show this information. This is about working note number 7. Set off of capital reserve against goodwill. Then after this there is intercompany transaction. Working note number 8, elimination of intercompany transaction. So now once again we have to see the adjustment. So let us see the adjustment once again. See this intercompany transaction adjustment number 3. Creditor include 18,000 for the purchases from S Limited means here subsidiary company is supplying the goods to the holding company. So it affects both the side, asset as well as the liability side. Debtor information total we want, creditor information total we want. Total means combined debtor we want, holding plus subsidiary, and combined creditor we want, that is holding plus subsidiary. From this you have to deduct 18,000 both the side. So now let us see that working note number 8, intercompany transaction. So creditor of H Limited. Creditor of H Limited we know, if you see the balance sheet you will get 30,000. Creditor of S Limited is also given 48,300. So total creditor is 78,300. From that deduct intercompany 18,000, you will get 60,300. This information, this 60,300, you have to show in the consolidated balance sheet. So now this is very clear. Under creditor in the consolidated balance sheet, you have to write 60,300. Similarly, debtor. Debtor of H Limited is given in balance sheet 56,000. Debtor of S Limited is 47,400. Total debtor we want, that is 1,03,400. Combination of holding plus subsidiary limited. From that you have to deduct intercompany, that is both the side 18,000. You will get one answer, that is 85,400. This 85,400 in consolidated balance sheet under debtor you have to show this information. That is about working note number 8. Then working note number 9 is treatment of unrealized profit. Treatment of unrealized profit. Again we have to see the adjustment for unrealized profit. Adjustment number 3. See this, for 18,000 worth of goods, 4,500 is a profit made, but there is 6,000 goods is remaining in stock. What is a profit? Like that we have to see. So adjustment 2 and adjustment 3 we have to combine together in order to find unrealized profit. So for 18,000, 4,500, 6,000, how much? Cross multiplication. If you do, you will get 1,500 as unrealized profit. So this 1,500 you have to deduct from profit and loss account, liability side, and from asset side under stock you have to deduct unrealized profit in the consolidated balance sheet. So all 9 working note we have discussed. Any doubt regarding this working note, you can ask me now. All the working note regarding this problem. Any doubt, you can ask me now. Tell me any doubt regarding this working notes. Akamsha, Amrita, Ankita, any doubts? Anusha, Ashish, Disha, Kushal, Narasimha, Nishant, Omkar, Pooja, Pratish, Shifal. Tell me. You can raise your question if there is any. No doubts at all? Why no one is responding? Yes, just let me know in the comment box. Ankita is saying no doubts. What about others? What others are doing in the class? Ashish is saying no, Pratish is saying no, Shifali, Ashish and Anusha. Okay. So now after this working note, last thing we have to do, yes, Akamsha is also saying no. So last thing we have to do is consolidated balance sheet. Consolidated balance sheet we have to prepare. See this now, consolidated balance sheet of H Limited and S Limited. So now let us discuss only asset side information. We'll discuss now. Asset side, freehold premises. So this freehold premises H and S Limited we have to show separately. So that is given in the balance sheet. So once just look at the balance sheet question. Freehold premises H Limited 2,56,000, S Limited 90. So combined information we have to write, add both and write it like that. So now let us go for consolidated balance sheet. Freehold premise H Limited 2,56,000, S Limited 90. Total freehold premise is 3,46,000. Similarly for machinery, there is no adjustment. Combined information you have to write. Holding company given 60,000, subsidiary company given 81,300. Total machinery 1,41,300. Next thing comes is stock. What about stock? Stock of holding company 68,000 given in the balance sheet. S Limited given 60,600. Total stock is 1,28,600. But there is one deduction from stock. What is that? Unrealized profit. So 1,28,600 minus unrealized profit 1,500. So now final stock answer. Final stock answer, that is 1,27,100. 1,27,100. Then there is a debtor. Debtor we have already discussed. Intercompany you have to deduct from total debtor. Total debtor we know 1,03,400 minus 18,000. Or else you can see the working note of intercompany. You can see this 8 working note number 8. There you have directly got the answer. See this after doing all the calculation. 85,400. Same answer you have to write under debtor. So debtor we have written the information. Then cash. What about cash? Holding company cash 60, subsidiary company cash is 33,000. This information is given in the balance sheet. So 93,000. So asset side information is over. Now let us see the liability side information. Share capital. Now share capital of 10 is H Limited, holding company. So only holding company share capital we have to consider. So let us see the balance sheet once again. So holding company share capital we have to take, and subsidiary company share capital we should not consider. Why? Because this is already existed. This is already set down. Some portion goes to the majority, some portion goes to the minority. And this is untouched information. That is why it appears in consolidated balance sheet. That is holding company information only. Then general reserve. Now let us see the general reserve. General reserve 1,90,000 is of holding company and subsidiary company 6,000. We can take this 1,90,000 in the consolidated balance sheet, but we cannot take this 6,000 information. Why? Because again this is shared, isn't it? Majority and minority. So we have to see majority interest working note. So that information we will discuss now. See this general reserve holding company given in the balance sheet 1,90,000. Subsidiary company you have to see working note post majority reserve. Post majority reserve working note number 5. Working note number 5 post majority reserve is nothing but revenue reserve 1,200. So this 1,200 you have to write under yes. Okay. So now add both, and what is the total reserve? Total reserve is 1,91,200. Similarly, there is profit and loss account information. Profit and loss account holding company given in the balance sheet 1,60,000. But we know that we can take only revenue profits and not capital profit. There is interim dividend paid, so that is 12,000. That is capital profit. So that is why this information we have to deduct from holding company profit and loss account. So total profit and loss account of holding company is 1,48,000. Now we have to see what is the profit and loss of subsidiary company. Subsidiary company we cannot take 1,08,000 whatever given in the balance sheet. We have to see post profit of majority. Again post profit of majority means majority interest working note we have to see. There wherever you have written revenue profit, that information you have to take for subsidiary company, that is 25,600. So this 25,600 you have to write under yes. So after writing it under yes, that you have to add to this 1,48,000. From that you have to deduct unrealized profit also. Unrealized profit two-way deduction I have already told, that is 1,500. So final profit and loss balance is 1,72,100. 1,72,100. Then there is a creditor. Creditor, total creditor we know that is 78,300. From that intercompany 18,000 deduction. Then final creditor is 60,300. Or else you can see working note number 8, that is intercompany transaction. Here we have got the answer. Minority interest, that is nothing but minority interest calculation. If you see total minority interest, you have to show separately. Similarly, there is a capital reserve. Capital reserve information, you have to see the working note number 7. Working note number 7, there we have got net capital reserve as 16,400. So that you have to show separately. Final balance sheet total is 7,92,800, both the side. Yes, any